Hello to all traders and welcome back to another market review brought to you by Orbex. So as we cap off the trading week, we're just looking at the big movers in the market yesterday. Gold and the dollar were two of them after we saw a positive, negative on GDP potential growth for America, and also initial jobless claims which come out every Thursday were a little bit weaker than expected as well, weighing in on the dollar even further. Adding pressure to this, we've got the US trade court and the fight between President Trump about the potential trade tariffs going forward. So a little bit of a shaky day. We saw the dollar index dive through the 100, well, the psychological 100 barrier, and we're seeing a little bit more pressure again. But we have had a little bit of support around the 99.40 area, which gives us a bit of hope that we could see a little bit more of a drive higher towards this psychological area as well. So we'll wait and see what the outcome is. But it was a very steep decline in yesterday's session, very negative. Boisterous pullbacks, especially sellers entering the market, more sellers attracting more sellers, and obviously the dollar is under pressure once again. But on the flip side, obviously we'll have to look at gold. Nice safe haven asset that we always look at to see what profits we can take from that. But as we go into the end of the trading week and into the end of May, actually, we're just waiting to see what the new month will bring. And obviously, if you are trading the weekend gaps, just be careful, because there are going to be a lot of potential gaps on Monday, especially when there's a new week, a new month to begin. So let's just take a quick look at the rocky ride that the dollar index has had. As I said before in previous videos, we're at the 102 level. This is on intraday. We had wave after wave of downside action. We had found some nice support before a potential spike. When we had this break, we were hoping that was going to be a runaway gap for the dollar to keep on moving higher, but that hasn't happened. As you can see, it's started to fall quite significantly. So with that being said, with the RSI falling into neutral territory, it hasn't really sunk even further towards the oversold area to get to a possible bullish divergence. We're not really seeing anything in the way of potential moves to the upside. So it's all fundamentally driven, and obviously we'll bring you all the big moves when they happen. Looking on gold, gold did have a 50 to 60 dollar rise in yesterday's trading, but now from the early Asian and Australian session, as you can see here, we're starting to pull back and lose these gains that we made yesterday. So not too much potential in the market. When it's very choppy to go in and out of the market in fast fashion, we're not really making too many dents in the market, let's say, unless you are trading, if you're scalping, that is. So we're just waiting to see now if we're going to have another dive down towards the 32.60 area before we start moving possibly a bit higher. But this confirmation of this $50 range at the moment is really just testing a lot of traders' patience. Are we going to just keep on this choppy ride, or is there going to be value in this potential? We'll have to wait and see. So lots to think about, lots to take into account. Obviously, we've got some other data today, PC data as well, coming out. We'll wait and see if that's going to have any big moves in the market. Sorry, personal income, personal spending, and core PCE price index as well. That's later in the American session, so that could affect the market slightly. But if we don't get much of a reading, then it could just be a non-mover. So just be careful about that. So let me know what you're trading on, what you're thinking. Is gold going to start pushing higher? Are we going to see not a record high, but just fresh peaks? We're going to just break this 33.60 area, or are we going to be languishing $100 below that? And where does the dollar go from here as we begin the new month on Monday? And we'll bring you all the latest in fundamentals and technicals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time around. Bye for now.